Great. All right, thank you. Let's call the meeting to order for the March 1 Finance Committee meeting. And if we could get an approval of the February 2020, actually it's February 2021 minutes. I apologize, it's my mistake. I've looked them over and it looks pretty accurate. So I don't know if some.
I'll move that we approve those.
Second.
All right, same. So I think we're good on that. I know we got a lot to talk about, so let's just jump right into everything. So 903, discussion of examination of BKD, Baker Tilly, Taft. I assume, is there any update to that at all?
Mr. Chairman, I want to add something in.
Yeah.
I went back and listened to the September 1st, I believe, meeting. And this was when Baker Tilly, BKD, and the Taft Law Firm presented this to the City Council. I was not at that meeting, but I went back to, and basically the investigation, which is what it is, was to be done by American Institute of Certified Public Accountant Standards for Forensic Services. Well, I thought I ought to look that up and see what those standards are. And they are effective as of January 1st, 2020. There's several things in there, basically, but the general standards of the profession are contained in a general standards rule, ET section, so forth and so on. But it's professional competence, due professional care, planning and supervision, sufficient and relevant data. A member must serve his or her client with integrity and objectivity as required by the American Institute of Certified Public Accountants Code of Professional Conduct. A member performing forensic services should not subordinate his or her opinion to that of any other party. That's number one. Number two, well, this is part of number one. It cannot accommodate deceit or subordination of principle. The next one is objectivity. Objectivity is a state of mind, a quality that lends to member services. It is a distinguishing feature of the profession. The principle of objectivity imposes the obligation to be impartial, intellectually honest, and free of conflicts of interest.
Right.
That is an important term. In determining whether a professional service, relationship, or matter would result in a conflict of interest, a member should use professional judgment, taking into account whether a reasonable and informed third party who is aware of the relevant information would conclude that a conflict of interest exists. I think the Taft Law Firm has a conflict of interest in this investigation or audit. They, by their own admission, say it's not an audit, it's an investigation, and that's what it says for forensic services.
Right. Yeah.
There is to be no communication after a certain period, and there hasn't been from us, I know. They just sat down with us at the start of that. And I would think that the Taft Law Firm would need to step away from this investigation, because I don't know what they could do, only filter the results of BKD and Baker Tilly. That would be distortion of the fact if that happens. I don't say that has happened. But I think that objectivity is an important quality of this, and we had an agreement with the mayor, which you all heard, that this would be, we would see the results from Baker Tilly and BKD at the same time they did. There has been great hesitation to sign an agreement to that fact.
Right.
So I think we need to be on guard that this is, I think, the inclusion of the law firm does away with objectivity in this investigation.
Yeah.
Mr. Chairman, may I address that, since he's
After I'm done talking.
demeaning my law firm and I'm here?
After I'm done talking.
Thank you, sir.
You can. So, basically, I'm a member of the FVS, which is Forensic Evaluation Services of the AICPA. And I would agree that there are certain instances when you cannot, when you lose your objectivity and independence. And I think this is one case, and I would agree with you from that standpoint. It doesn't mean that you wouldn't be objective, but
Is now
just-
joining.
it's no different than if I'm doing, if I'm doing an audit, I can't do the valuation also. It's an inherent conflict of interest, and I think it's disingenuous to believe that someone is doing or overseeing an examination at the same time they're overseeing being the city attorney. Frankly, I don't care if Taft is the city attorney or not. It doesn't bother me at all. I have no problem with that. I cannot, I am a little bit surprised that they didn't wait to be the city attorney until after this examination or investigation was complete.
Their receipt of money from the city of Westfield kind of removes their objectivity, in my mind.
I think it's more than just about the money. It's about it's really just the conflict of interest. It's the inherent conflict of interest of representing two sides. That's why you don't do it.
Yeah.
I've been a member of the FBS. I'm not sure how long. I'm sure it's more than 10 years or so. I have no idea. But that's one of the premises when I get on the stand to testify that I'm independent, and that's part of it. And I'm surprised that we don't have those, that we're not recognizing those same standards.
They proposed the rule.
I don't know if you have anything to add or no. Go ahead. Feel free. Shoot away.
Oh, no reason to shoot, Mr. Chairman, I appreciate it. I'm not going to speak to the independence and the credibility of Mr. Callahan and Mr. Hedden. They can do that themselves. I will respond to the aspersions cast against Taft. 6 weeks ago, in a pre-council meeting, I told you there was absolutely no conflict of interest. And that sentiment was echoed in an order by a judge, who's the only and last person who can say that with any degree of certainty. The fact that this dance is being done here to cast blame or to cast aspersions against Taft and it's the propriety of what it's doing and how it's acting, I just will not stand for it. A judge has determined that there is no conflict of interest in any way. Sir, I let you finish, if you could let me finish.
What judge?
Go ahead. Go ahead.
Judge Brown.
Go ahead. I listened to what he said during the thing. Go ahead, though.
You need to listen to what he said. You can read the order.
Are you done talking or no? I don't want to interrupt you. You have
Well,
something
you
else?
did twice. I'm finished now. Thank you for now.
Okay. Okay.
So if I.
I don't know what's funny, sir.
No, so just listen to me just really carefully. Whether the judge, whether he says there's a conflict of interest, and frankly, you know what? I don't care about that case of him trying to throw it out, but in the interim, before he ruled, he stated, he said if the court treasurer had a problem with anything ethical that was being done, that it should be brought up to the ethics board. It was pretty clear that he was going to rule in your favor on that. That doesn't preclude the fact that it's still an independence issue. I think you're splitting hairs by saying, well, the judge said that we're independent. He didn't say you're independent. He just said he wasn't going to rule on that very thing. So, I mean.
Sir, you can read the order. I'm not
Okay.
going to discuss the
Yeah.
case. That's beyond the scope. You can
Okay.
read the order.
You can
but-
read that too.
It's in the AICPA information. It's a clear conflict of interest.
It's absolutely not.
Okay.
So if I can jump in here very quickly, and again, I think the phrase you used was solely the law firm, and I don't think there's any attempt for that whatsoever.
No.
I don't think anybody's made any aspersions to that point in any way, shape, or form. I think if I understood Joe correctly, Counselor Edwards correctly, the point being that a third party, an unbiased third party, would have to be able to look at it and say that there's no conflict of interest. I think to Joe's point, since we represent the taxpayers, we have to be able to confidently and comfortably say, not that we think someone's doing something wrong, but that there's no bias whatsoever. That, I think, is the difference. So I think you jumped to the side of, when you stood up here to defend yourself or defend your firm about this law suit. I don't think that the commentary had anything to do with that, for what it's worth.
Mr. Fry, I will not comment on the lawsuit itself. I will not comment on the aspersions cast against Mr. Callahan's independence or Mr. Hedden's. They can do that themselves. But what was said by Mr. Edwards was that there's a conflict of interest at Taft. And he did reference the case. He did reference both sides. Councilman Patton did as well. That's why I had to address it, because that issue has been decided on. And I'll repeat it slowly. The same time, 6 weeks ago, I said there absolutely is no conflict of interest, otherwise we would not have proceeded. I repeat it here today.
Thank you for your repeating.
Yes, thank you. Okay. All right, let's move on.
That'd be a great idea.
Yeah. 9:05.
Did your law firm write the engagement letter? I believe they did, didn't they? The scope of the engagement, the engagement letter?
There's 3 separate engagement letters, if I recall correctly, Mr. Edwards.
Well, there's one from Taft, because that's the one the mayor showed me.
There are several engagement letters, Mr. Edwards. I'd be happy to go through each one with you personally.
I'll dig it out.
Okay. All right, let's move on to Grant Park. The update from Grant Park, just regarding the questions in the last city council meeting. Is William with us, Todd?
I'm on the call.
Oh, great.
Excellent.
Hey, William, how are you?
Good.
Hey, I assume you guys are gearing up out at Grant Park for the season, or getting pretty close. I know you guys were swamped with soccer this weekend, or at least it looked like it.
Yes, we had a fairly active weekend.
Yeah. Last time in the city council meeting, you gave a presentation, and it was a great presentation, and we appreciate what you're doing. I think, there were just a few questions, regarding the total cost of Grant Park and maybe some of those type of things. I don't know if you still have those in front of you, but maybe if you just want to address those items, just real quick.
Yeah, and just for clarity, I took away 2 questions that I did address, one of which I sent a document over to Council President for his dissemination to the group related to the debt service for the campus. And then the second question was related to the economic development within the city as a result of Grant Park. And our community development team is working to update those numbers. I think that number has shifted since the last time it was reported. So they're working to update that. The document that I shared with Council President was related to the current balance of the debt and also the annual payment amounts for the debt for the campus.
Yeah, and frankly, William, I'm not concerned with really whether Grant Park, I am concerned with whether Grant Park makes money or not, but I'm really not. I'm really more concerned about, or not even concerned, I'm curious where we are in terms of our economic development, and maybe Todd can answer this a little bit better, but I think, because one of the things I think that we kind of get maybe a bit confused on, or at least maybe I'm just confused on it, is the difference between our economic development and then and maybe cost of our land that we're including in the increase, because we all know land prices are very high. But so Todd, and Todd's walking up here right now, William, just so you know. But so Todd, maybe you can kind of allude to the economic development piece. You know what I'm saying, right? Versus land going from like 10,000 an acre to 500,000.
Yeah, so where we, and it is a large number, and it is, I think it can be argued either way on how you quantify it and qualify it. So our approach on trying to capture that value is the value of permits. So as an example, later on in this presentation today, you'll see that Old Town, using that as an example, and we're not attributing that to Grant Park, but Old Town is going to invest $69 million in our downtown. Well, that doesn't net out to a taxable assessed valuation. So we took a gross number of investment when he's either come out of the ground or has been applied for as far as a potential project with what they self-report on, they're going to invest X amount of dollars. That could be inclusive of the real estate, We don't really have never asked for what a breakdown is to throw it into that number, because it is still a cost. And it gets valued by comparison. So I think the number is a little over $1 billion since the inception of Grand Park. So that's the number that we've kind of, we built on based upon the self-reported investment number that by the applicant or petitioner.
And Todd, just real quick, because I know I probably always ask you this, and you probably always tell me, so the $1 billion, is that the increase in land value also, or is that the commercial development piece, as well as maybe some of the other things right around it?
Yes, that's largely the commercial development citywide, not just in that particular
Okay.
campus area,
Citywide, okay.
So we would consider Abbott, we would consider Bastion in that, anything that's developing in North Point is overall, since Grand Park, direct and indirect. So direct would be easily argued hotels.
Yeah,
Any sort of supporting food service or tourism kind of category would be columnized in the direct impact. So again, using a real-time example, Birdies. I don't know the
Yeah.
investors, but one can argue, well, that's a family entertainment venue. We have all these visitors with children. It makes it a logical investment to do a business such as that.
yeah. You know, one thing, just real quick, and I apologize, I'll stop talking. But when we meet in March,
Yes, the 16th.
yeah, I think one of the things that maybe we could do, and because I've just kind of done this, just, in a very rudimentary way, is, I said, here's Grand Park, here's Grand Junction. To make it, it'll never be a zero-sum game. But if we had a zero-sum game, we would say, hey, what is our economic development requirement as if we never did anything, right? To where we had the economic development to pay for that. And at one point, and I think I maybe shared some of those numbers with you, just kind of off the top of my head. So for instance, even like Grand Park, to make it a zero-sum game, as if we never did it and everything was equivalent, we'd have to have about 2.3 billion of commercial development to essentially make it zero out. And I know we're on that way, and it's a little slower than maybe we anticipated, and I do think it's doing well. To some extent. But do we do those calculations, or maybe we should work on that in March?
Yeah, we have done those in the past. I think what you're saying is a dollar for dollar for every public dollar we obligate, borrow, invest, we need X amount of economic, or AV, not economic development, assessed valuation to cover that obligation.
Yeah.
So yeah, we can come in with that calculation. I think a few years ago, a neighboring community ran some really rudimentary calculations, says, well, we need houses at 275 baseline to pay for city services.
Yeah.
And that's no other investment. And as you can imagine, that kind of creates a narrative that you
Sure,
can't
that's a
get
mark.
out
It
of.
may not be an accurate mark, but it's a
Yeah,
mark.
and it starts perhaps even a social argument that
Right.
about inclusivity and
Do
things
you
of
think
that.
this is a good exercise for us to do? Or I'm not trying to give you a rhetorical question, because obviously I think it is.
Yeah, no, there's things in our control and things out of our control, market forces. So I can tell you their neighboring community has an Arbor Home development. Entry level there is $185,000. That same floor plan in Fishers is $25,000 more. So there are a lot of equilibrium there, right? So it's same floor plan, same builder, different zip code. It goes up $20,000. Well, it probably does cost them the cost of real estate, but the actual material acquisition and their supply chain, no different than the Northwest community versus the Southeast community.
Yeah.
So I think it's probably more of a academic exercise versus a actual practical exercise that, well, we need X amount over here, we need these types of businesses. I just met for a few minutes last week with the representative of Abbott, and so asking how their talent acquisition is going. And they said very well. I asked them if it would be appropriate, once they get up and stabilized, if they could share their data sets with us, where are their workers coming from? Because they have a blend. They've got C-suite executives, they've got production floor folks.
Yeah.
And so I'd like to see all right, they chose us for this matrix and availability of talent. They chose us because Indiana is a business-friendly state. So I'd like to see that now in real time, post-production or post-opening. How did that work? And, because that's meaningful, those are meaningful data sets to us. So
Yeah.
that's a $30-some million investment. You've got Gordon Foods, which pandemic slowed them down, but they're still poised to do it much longer timeline. It's $145 million. That would be included in that $1 billion number, but it's not directly related to Grand Park.
Yeah,
So we could distill out easily the types of businesses related to Grand Park. What gets marginal is, so let's say Myers, an example.
yeah,
Myers probably that transitional business, because did Grand Park and the visitors and the demand on the system accelerate that? Did all the rooftops accelerate that? That'd be a question for them, not us. But that's kind of how it's a big number that just come through the door. Is it directly related to Grand Park? Yes or no? That's a question we can answer.
okay.
I'd like to congratulate Mr. Knox because this is the first profit and loss figures at the last city council meeting that we've seen on Grand Park. And it's reassuring to see that. It really
I think it was a
is.
good presentation.
It was a very good presentation, and I appreciate it very much. And a lot of this information will spring forward out of some of this, I think.
Yeah. Yeah, okay, well, okay, so let's kind of, on March 16th, even though maybe it'll just give, you don't have to come back, but, you know, give us a roadmap, even though maybe we have some detours along the way. I mean, and I'd like to do the same with Grand Junction too, because obviously, you know, that's kind of a hot button for me as well. I mean, in terms of the costs. So I'd like to kind of hit that as well. And I know we're
And just to continue the dialogue, the 16th, we will have all the capital projects that are active and then are forecasted.
Okay.
So those involve borrowing instruments or cash. The tax rate management, and then anything in the pipeline, particularly with Jeremy's infrastructure sheet that I think's been circulated, and it changes. And then the schedule of capital purchases that you were presented last year relative to the GEO bond. So what do we do to step away from that GEO bond? So you'll see that on the 16th, and it's just to be a conversation
Okay.
on keeping the tax rate stabilized, what's the trajectory of local income tax and assessed valuation. So we'll have that ready to go.
Okay, great.
Thank you.
I'm just gonna really quickly address this. Todd and I talked in the past, a long time ago, about an annual audit of Westfield. So I've been talking to a lot of CPA firms about this recently, and just kind of having some lunch meetings with folks. And I think we can get this thing done for half the price that Fisher's pays, quite frankly. I mean, I've talked to a lot of regional firms, good regional firms. They'd be independent. We'd use them, we'd bid it out, obviously, for the audit. And I think that will, I hate to spend the money, but I'd rather, the State Board of Accounts is 2 years in arrears, and I cannot imagine running a business or the city, and I equate them as the same, and not have timely information. I mean, it just drives me nuts. I mean,
Well, as you know, the administration fully supports that.
Yeah.
And the State Board of Accounts activity is more of just a review. Did things get handled according to state policies, right?
Yeah.
State law. It's really not an audit. I mean, they look at certain things, right? And I still am amazed that they spend more time on auditing federal grant programs than they do state grant programs.
Yeah.
It's kind of an oddity to me. Not to be overlooked, we still have to pay the State Board of Accounts, I think about 30-some thousand, maybe, is it that much?
Yeah.
$30-some thousand
Right.
that could go to an outside firm that's reviewing and auditing according to GAAP. So
Yeah,
sign us up.
yeah, no, so I think we have to give them, I've talked to the state, we have to give them notice. I think I might be
By
wrong,
May.
6 months.
By May or June, we have to give them
Yeah,
notice.
6 months, right? Or,
Yeah, you have to enter into, I don't know if it's an agreement, I don't know the formal instrument, but yeah,
so maybe when
they
we
sign
meet
off
in
on
March,
it.
I'd like to kind of start pushing that forward.
Yeah,
Sooner the better.
It's Cindy. Yeah, and that is true. You have to let them know because they do still go over it, but an independent audit would be great. So they do it once a year, and they just give the State Board of Accounts their results. That's
That's
all
right.
there is.
Right. Okay,
I agree, and I favor that greatly.
okay. I know we're behind,
A
so.
little bit.
As do I.
Okay, let's just do, you want to do Old Town, Todd, the presentation, or you have something? I know, we're running late.
So I circulated to this body as well, I think the full council, these documents. Late last year, we began to re-engage with Old Town, I think at the behesting of members of the council on the potential parking garage structure downtown. My memory serves me correctly, this project will be the first large-scale public project that this council will consider for using public dollars. Everything else we've discussed has been either underway or it's not to this scale. So what you have, I've asked Jim Treat, and this is his work product. I won't read it verbatim, but it is a 7-page summary of the project with conservative estimates. I mentioned in a previous bullet point, Old Town, including their Union Square, which is phase 1, and then their Midland North, which is they consider their phase 2. In sum, it's approximately $69 million of investment. Now, that's gross investment, that's not net. It has long been discussed and perhaps public outcry for a parking solution in our downtown. So what we have begun to for months discussed with Old Town, a parking structure that is sized in the deal, in the partnership, to match the assessed valuation that they would otherwise bring to this area. So their tax increment would cover the debt obligation of the parking garage. And it is forecasted in total, I think it's up here.
And is that fully, Todd?
So with the two areas, the phase 1 and phase 2,
Okay.
combined will create enough increment, which is approximately $922,000 a year, with debt service just a little over $700,000 a year. So as we get going, you'll see in this packet an amortization, you'll see approximately $149,000 of unobligated increment that will come out of those two projects combined. So the RDC, we presented to them an amendment to the declaratory resolution to sub-allocate those two areas and to service this particular potential debt obligation. So that money can't flow anywhere else, and we can't pull money. We're not obligating ourselves to pull money from other areas of the tax increment district to pay for this parking garage.
Yeah.
It is all concentrated on the Old Town development.
Yeah. I was listening to the RDC meeting, and, we're talking about the sub-allocation area for this piece.
Correct.
The one question I have, and frankly, I'm really not opposed to it. I mean, I always hate, obviously, government acting as developer, but, so how does it, I mean, why don't, I mean, if it's such a good deal, I mean, why doesn't the developer engage in this themselves? Is it just because of the tax, because they can't recapture the tax, and that's the only reason
Yeah, I
So
think
that's what we're paying
historically you'll find in developments that everybody wants a parking garage and nobody wants to pay for it.
right,
And in order for them to construct a garage solely upon their own back, I think it just doesn't pencil it to come out in their rent, is what they tell me. And I believe that. You got 11.9, let's call it $12 million soft cost and capitalized interest in a project that's already $69 million, so you stack that on top of their existing capital stack. So this, it's clear that many people, even on the council, are not fans of TIF, but this is what the General Assembly envisioned with the use of tax increment financing.
Yeah.
To use, earlier you used the term zero-sum game. Well, today, I did the math on this, I pulled all the property cards, there's about $37,000 of tax revenue coming out of all those parcels in both those redlined areas.
Say that again, I'm sorry.
About $37,000 combined, which we would get about 26% of that, so roughly $7,000 that we're getting. So Today, there's very little increment, there's no parking garage, there's no debt. If we engage in this, there's no revenue coming into the general fund or any other overlapping tax units. We do have a debt obligation, but we get a parking garage. And it's paid for not by any of the other parcels surrounding that, it's paid for by that developer's project and that investment in capturing and paying the debt. So it doesn't put pressure. I know a project not too far from here that is property tax backed. So the developer is building with the city the garage, but if the increment doesn't cover the debt obligations, they go to all the rooftops and pull revenue to cover that debt obligation. You'll see in this packet what we have embodied here or envisioned is a lit back, a local income tax, as a credit enhancement with no expectation to fall on that as a reserve. We can now put this as a credit enhancement, whereas before we had to have a debt service reserve. So we had to borrow money, put it in an account, never touch it in case debt obligations didn't, or the revenue didn't match the debt obligation. So, again, I'm not going to read this bullet to bullet. I'll leave that to you as you're reading it at your leisure. You'll see Mr. Treat's assessments there on a conservative scale. You will see the sources and uses. Takes us to 11.9, almost $12 million, and then the amortization as he runs it out over the life of the term.
Todd, I've got one quick question, if I may.
Sure.
And this may be a silly question, but I'm going to ask it anyway. One of those bullet points said that there's no plan to use lit. Is there a way to button that up and just enforce that there will be no lit used for this?
Well, then there would be no reason. So then we have to go to the bond market and they'd say, okay, what's your backup?
But isn't that the reason for the conservative approach?
It is, but you still have to put something in front of the bond market and say, okay, if the increment doesn't come, how do we get paid? And so you put some sort of security up. You would either say property taxes, local income tax, you would use some form of revenue to assure the bond holders, well, if the assessments don't rise to what you say they're gonna rise to, and the bill is $10 and you only come up with $8, where's the other $2 coming from? So we have to represent that to the bond market, the lenders, early on. You can pivot and say, all right, at that time, you don't have to use that. Whatever fiscal body is sitting here, you don't have to use it, but we have to represent to them what we would use in the event of.
But the bond market will do their own due diligence on that too,
Oh,
to be
yeah.
sure.
To some extent.
But I think we need to do this because if there ever was a redevelopment project in Westfield, that's it.
Yeah, you know, my biggest concern is maybe not the financial aspects of it, but it's the best use and cost and space of that parking garage at that spot versus another spot versus how the entire Grand Junction area is going to look like. And I think one thing that I've been kind of disseminating my thoughts and getting, when I get feedback from people around the city, it's not that we can all disagree whether, or agree or disagree whether Grand Junction was a good thing, we paid too much or didn't pay too much, whatever. But actually, I think the one thing that even people that probably I disagree with, that we do agree on, is that people want to know what the entire downtown's going to look like. Some kind of rendering of in 15 years from now, what is this going to look like? Because otherwise, we just start shooting in the dark. And even people that adamantly disagree with me on other things say, yes, we need some kind of plan.
Well, and I'm not a land use guy by design. I do that on purpose. But there are plans, and there's the comp plan, and there are iterations that, obviously the comp plan, and this is all I'm going to say about the comp plan because I remain blissfully ignorant on the comp plan. It was 07. There's a lot of changes that have occurred since 07. I think there's enough historical work product that helps guide that. But as I noted in the council meeting a few weeks ago, the APC and ultimately the council has the ultimate say. So if you're talking about architectural standards, land uses, while there is some work product and out there in a three-ring binder, at the end of the day, it is the council. You don't have to follow the plan commission's recommendation, you can do what you want. And so, I'm gonna hover over here.
Hey, Todd, not to interrupt you, has anybody ever put together like a rendering of what the downtown would look like in 10 to 15 years?
I'd have to ask Kevin Todd, I think there's probably some charrettes that have been
And I get it, probably changed.
provided,
But,
yeah.
you know, how does that impact the Board of Public Works? How do we maintain this area as it grows up? I mean, does it look like the gas lamp district? Does it look like
Yeah.
Kevin,
No,
Ohio?
I'll get with Kevin, on that. I think there's probably some historical design charrettes that would kind of frame your mind on that.
I think something like that would be critical in, again, to Councilor Patton's point, that is this the best use of that land? You know, we can look at this project on its own merit and think, this looks great.
Yeah.
But what do we envision going around here? What is the next domino to fall, so to speak? What is that gonna look like for this area?
Yeah.
And
Yeah,
could it
I'm not
be
the
better somewhere else?
subject, yeah, I'm not the subject matter expert on design criteria and land use, but bear in mind, Old Town, started this process 4 years ago.
Yeah.
And to get to this point, it would have had to have matched whatever's on the book as a design metric. Today, Old Town has a bona fide approved agreement that contemplates surface parking. I would think all of us would agree that while surface parking is going to show up here, it's probably not the highest and best use to go sprawl and lay everything in blacktop. We want to go vertical, right? So how do you gain AV? And it's not a parking garage, but it's vertical. You go up, you don't go out. And so the concentration of vertical improvement is something to be required or certainly impressed upon, that we don't spread out. We want that dollars per square foot to be very concentrated. So as it relates to this particular potential public-private partnership, it is Old Town it's I think in your packet you'll see 350 to 400 spaces. While there's a 50 space swag in that is being on the market. So we're gonna build as many as we can with the number of the capital stack that's been presented. They'll lease, so let me go to the flow chart here. Just briefly, how this works. So we'll enter into with a subsequent agreement with Old Town. They'll have a lease on a certain percentage of spaces. They'll charge for those spaces, and then they will, with those monies, we'll enter into a maintenance, repair, and operation using that money for the operation and maintenance and inspection of the garage.
Yeah, I'm glad you brought that up. So, you know, one of my clients, you know, owned a big parking garage downtown across from the Bank of Indianapolis. And, you know, when I saw, you know, this is back when I did all the, you know, CPA stuff, but, you know, the cost to maintain that parking garage was not cheap.
Right.
I mean, you know,
Another reason why no one wants to own it.
yeah, right. I mean, you know, they had to re-epoxy thing. I mean, they had to
Inspection, lights, snow removal, trash removal, all that stuff.
Yeah, so one of the things I think of, the first thing I do is when I see the bonds going out to, you know, 2045, I'm like, man, they're gonna have to do maintenance.
Yep.
In between that. Who's paying for that? Is that,
So it's a subsequent agreement that we'll enter into with Old Town. Because they're gonna charge their tenants for those spaces with that revenue. They'll either pay directly through that agreement, we haven't worked all those details out, or they'll submit those monies to the redevelopment commission to cause those activities to happen. So we've identified the need, we've identified how it's gonna be funded, it's just who's gonna cause it to happen.
The expectation the expectation is that the residents, the charge that they're gonna have for parking will cover the cost in its entirety? Or a
So yeah,
portion of it?
that's the model that we're pursuing with Old Town, is I don't know the metrics of that, but in their rent calculation is the access to those spaces.
For 100% of what we're anticipating the
Right,
cost to be?
I believe
Okay.
that is correct, yep.
okay.
And we'll bring those agreements. Real quickly, this is just a flow chart, because this is somewhat of a complex deal. The question was asked, why are we using the Westfield Building Corp.? It does exist. It was created for the purposes of the public safety building back in the mid to late 90s. It needs to be repopulated, But this statute that employs a building corp allows us to enter into a construction project such as this. So Old Town will build the project, because you don't want two different contractors and there's a lot of finger pointing. So we enter into a partnership and an agreement with the building corp. Those monies flow to the developer to build the garage pursuant to our standards, just like any other, privately built but public asset. And so that's how the money flows. That's why the building corp is there, so it allows us to have Old Town build it. And it comes back, redevelopment commission captures the increment, sends the building corp, goes up to the trustee, back to the bond purchasers.
So you're gonna hate me for saying this, but I'm gonna say it anyways. The one thing, like a long time ago, when you and I were talking about the police,
Correct.
And fire headquarters,
Yep.
the Westfield Building Corp was involved in that. And I remember, I think you told me, you said they didn't do a very good job of making sure like that the roof line and some things weren't done correctly. So my first thought is,
Yeah.
my memory's not great, but I just remember you and I having this
Yeah,
conversation.
no, a lot of lessons learned, and with the building corp, and keep in mind, that is, I want to be careful with the terms that I want to say, but I shouldn't say. It is there as a framework that really have little to no authority on certain things. It's just how the statute sets it out.
Who oversees it then? I mean,
So they're just independent. It's, I don't know, statutorily, I don't know the best way to describe a building corp. I want to say shell corp, but it's not really.
Well, it's not, it's, if I may.
Yes, please.
There's a statutory mechanism set up to allow for a public-private partnership where you have it's a corporation with a board of directors that is set out, and it's a way to maximize the flexibility that's allowable under the statute for these types of projects. Because otherwise, cities all over the state would be giving money to private developers directly without any sort of intermediary oversight, and that's not something that's allowed in the statute. So this allows the city to establish all these standards, the bond structure, and then to move forward through a building corp, which is a nonprofit, separate corporation that's set up to help with that structure and to maximize the flexibility afforded within that process.
so now I think Old Town's they're a good partner, right? But my problem, Manny, and my skepticism, or Todd, is that, we don't have the same thing happening
Yeah,
with the police corporation, because they really weren't paying attention to the quality of the work that was done, and now we're having to possibly build a new.
So that comes back to, at the end of the day, who has the final
Yeah,
say?
so there's two things. There's the financial structure of it, which is this,
Yeah.
and then the functional exercise of inspecting and making sure things are built according to spec. So that falls on the administration and would be a project assigned to Jeremy's department. We would hire inspection services, just like we do any other project. You didn't know that, did you? You know it now. So, you don't want me doing it. So we would stand alongside of Old Town. If we did this independently, we would put it out to bid and we would still do the same inspection activity just with any other contractor. This, because the building corporation allows us to go directly to Old Town, since it's our garage is going to be attached to their structure.
Yeah, and I would say, since they're gonna occupy the space, they have a more vested interest in making sure that it's done correctly, as opposed to like with the fire and police, where nobody.
Yeah, I mean, I have all the history on that as an observer,
I'll just
so.
add to-
Sure.
If I may, Mr. Chairman, and just for all the approvals and the specs and everything that's gonna happen, that's gonna be vetted well before this is all cooked and ready to go. So the building corp, for the financial aspect of it, is a statutory mechanism. It's within the statutory mechanism to help maximize the efficiency and then the flexibility to enter into this kind of project where it doesn't make sense for a lot of standpoint, as you mentioned, because it's attached to their building, they have a vested interest
Right.
to go out and bid it and go through that full process. But ultimately, all the agreements, to Councilman Fry's point, whether it'll be, fully paid for, all the maintenance, all of those terms will be separately set out, and they will have to follow that. And there'll be clawback provisions and all sorts of other issues.
Okay, all right, thanks, guys.
Any other questions on this? This is, so what will come before you, just real briefly, you have a timeline, because there's a lot of moving parts. There's about 17 steps starting from February 22nd in front of the RDC, all the way through June, if we enter into this, to the bond sale. So what comes before the full council on March 8th is the term sheet, which you have, and we'll just introduce that. Let's back up here. And that'll be an introduction on the 8th. The full council has these documents. And you can see the cadence that we'll undertake as we move along. The Plan Commission has an action required. And it comes back to the council, Building Court, Redevelopment Commission, Economic Development Commission, back to the council, and it's quite a,
We could pause on the 26th there, Todd.
Yep.
Councilman, that's what I was talking about, where it comes to you for the pre-approval of all the agreements that would set out those terms.
Okay,
So you see there, you have a resolution approving the project agreement, the lease, and then the ordinance that would bake in the bond. So you'll lay eyes on this and have the ability to comment on it, to make sure any term from an oversight standpoint that you want baked into the full agreement is within those documents.
okay,
yeah, this isn't just one time in front of the council, this is several iterations under different circumstances of consideration.
okay,
So
all right,
that's the parking garage.
okay. Y'all done?
Yeah.
Okay.
Do you have any questions?
No, no, I
good-
think
it's
we're
good
good. I think we're
project.
good.
Okay.
Jeremy,
Thank
the
you.
good news is, there's not as much time to talk about Grand Junction.
Perfect, and
The
yeah,
bad
before,
news is, we're gonna talk about Grand Junction,
it's
right?
all right. Before we jump into that, as your comments associated with what downtown and the Grand Junction area is gonna look like, in 2016, the Plan Commission and the City Council approved an amendment or an addendum to the comprehensive plan, which is specifically, it's called and stated the Grand Junction subdistricts. I emailed you guys a link to that document while you were talking, so you should have the work product of that process, and I included Kevin on that, so if you have
Thank
any
you.
questions.
Okay, thanks.
Okay.
Okay, so maybe, obviously, I wanted to kind of go through this exercise with Grand Junction. Obviously, for me, I want to make sure that we don't repeat history. I mean, even though, it's often we do, and I mean, history, we always say history repeats itself. In terms of the costs of Grand Junction, what happened there, we understand that. But I want to kind of dive maybe a little bit deeper and say, we have our, and I think maybe the Wilhelm gentleman has got tired of us talking and left, but maybe he's still here. But talk about not only that procedure or process.
He's still here.
Okay, awesome, thanks. So that we went through that bid process, but then the underlying bids and how we got to the point that we were, $10 to $12 million. And I understand the time frame, and I've been trying to do a lot of research on construction costs and the increases and that sort of thing, as well as here in Indiana and talking to people that own construction companies here, friends. I was in the Hod Carriers and Laborers Union actually for 2 years. So I know some people in that arena, and I've talked to them about it, and I think they would agree that costs increased, but maybe not to the extent that, we're seeing. At least that's just opinion. And so I just kind of want to delve into that, talk about those underlying bids and what went wrong at what point.
Okay, so I think we're talking about two different processes, right? So the estimating process, Wilhelm was not a party to. That happened back in 2016 with the design process, to where we hired effectively two estimators. There was an estimator as a part of the design team, and then we hired independently a local construction company to bid out the documents at the end of it was about the 50% stage of CDs, so that way we had a round of changes then that we ultimately delivered in the construction documents. Really, value engineering is what it's called, but I understand that some folks don't like the term. So that process happened separate from Wilhelm. Wilhelm came in, took those construction documents, and per the statute, did public bid process because it's required as a part of the CMC for a public project. So they sent the bid documents out. Obviously, there were a number of packages, 32, I think, is what comes to mind, that went out to the different trades, the different people. One thing I would highlight, though, is there's nothing about this that's off the shelf. Everything in the park is custom. So you can't just really look at the cost of a residential construction project and put the two pieces together. It is, the building in particular, the buildings are all very, very custom. They're basically habitable pieces of art, which is the direction we were given and the direction that the community, selected back during the whole process that started in, 2012 with this design, I think. So, as far as where did we go wrong, it's pretty hard to say. Because estimating is an educated guess, right? We're taking the things that we know and we're inputting some data to understand what the cost of it is. The reality is the cost of construction is dictated by the marketplace. And I provided you the bids, and it was the different iterations that came through the RDC for approval for the different sections. So the different GMPs, GMP 1, GMP 2, GMP 3. And the reality is, when we send it out there, it's a low bid opportunity, right? So the lowest bid is selected. And then we were value engineering or changing scope inside those contracts after they were selected, after the contractors were selected. So with something this complex, I don't think there's anything that we can point to that says, hey, this is why it cost more. Reality is the market drives the cost of the project.
So, and maybe this is a question for you or Mr. Wilhelm. So, if I just, again, just from a layman's standpoint, if I'm doing a construction project and we have, I say, hey, I need, we're going to move this much land, and that probably didn't change a whole lot. But for instance, we aren't doing certain buildings, right? And let's say somebody bid, and this might be bad, but drywall. Okay, we're going to put up drywall inside these things. But now we're not doing drywall or electrical or things like that or plumbing. Wouldn't we be saving all that money? I mean, because
Absolutely. That's how we got down to the cost of the project as it is today. So
Okay.
when they bid let's just talk about the three main buildings, the amphitheater building, the stage building, the trailhead, and then the plaza building that we are constructing. Those are the ones that are really custom and really technical. So when we bid that, it obviously came in over budget.
Jeremy, I didn't hear that last building, what the name?
There's the cafe pavilion, the stage pavilion, and the trailhead pavilion are the three main.
Cafe Pavilion.
Yeah, it's the one in the plaza that we are currently constructing and the
I
basement
just
exists.
didn't understand.
Yeah.
what you
Yeah,
said.
yeah. And that's really what took so long. We got these bids back and obviously we had to make some adjustments. So when we took out some of those other buildings, obviously we're drawing down those costs. And then we were working with Linnell, which is the only company that bid and was really capable of doing this type of custom work, certainly in the area. So working very closely between Wilhelm, and I won't speak to them on the process, and the construction company to draw those costs down and understand, okay, if we take this building out of phase one, what is the new cost? If we take this building out of phase one, what is the new cost? And that's how we value engineered down to where we are today.
So, looking ahead, I'm going to ask this question. This might not be the right time or the right place to ask this question, but looking ahead to finish those projects, is there consideration given to, obviously we've got an idea of what it's going to cost. We know how much it's saved us at this point, in theory.
We know how much the two additional buildings, which are really the two components that are missing, would cost if we were building them today.
So we
Based
know
on-
today, while we're, while we're out there, here's how much additional this will cost us. Have we given consideration to just how much that's going to cost us and when we think we're going to be able to circle back and build those into the future? I mean, is that, how much are we giving up by not biting the bullet now as opposed to biting the bullet in 5 years or revisiting it in 7 or 8 years?
So the projected costs, are you
Correct.
saying the escalation? Tyler's on the line, I believe. He put together, based on the, working with Linnell, which is the construction manager, and all the trades, he put together those costs. The stage building was 5 million, the trailhead building is 3 million. Tyler, did you put in any escalation factors, or were we assuming those were today's costs?
That was back towards the end of last year, and we were thinking to go concurrent with our project. So as long as we're there and getting done by the end of, was it this year?
Yeah, but, you know, if we go with the stage the way it's currently designed, it won't get done by the end of this year, but that was based on us being able to get started and do it in parallel.
So what they're saying is that that $8 million I just quoted you is if we were to pick it up and put it back in the project as of end of 20, we're obviously moving forward with them not being in there, so you could assume some escalation costs associated with that.
All right, thank you.
We are going ahead and building, we went ahead and put the foundations and piles in for the stage and are building a temporary stage.
Yeah, and as I presented to you all before, we're doing everything we can to add in the piece later on. So you're gonna have water supply, you're gonna have everything there. The stage will actually be there. It will be a temporary stage, so when we build the building, the top level of concrete, we'll call it, will come off, and then the building will come on, with the full idea that we don't have to do them both at the same time. We may never have to do the trailhead ever. We may decide that it's, not necessary. I think the stage pavilion building is absolutely necessary, and we need to get that in our plan somewhere. But the idea is that we can then build that building without closing the rest of the park. Everything else is open and functioning. We have a small little pocket construction project with everything delivered to it so that we can construct the building.
Yeah. So what was the, and this might be a question for you or one of them, but what was the exact date that we knew that we were over budget?
It was when the bids came back, and when did the official bids come back with the first RFP? Do either of you know that?
Yeah, the first round was October of 19.
October 19 is when we got the first bids back, and we were 48 million, I believe.
I'm just gonna ask the question.
Yeah.
And I'm not trying to beat anybody up. I'm really not. To Counselor Patton's point, I want to make sure that we understand the process well enough to make sure we don't find ourselves in this situation again.
Sure.
So we knew in October of 19, yet if my memory is correct, which is questionable at times, the funding was approved for this in December of 19. Is that correct?
No, the funding was approved in either late 18 or early 19.
Well, when did?
Are you talking the contract, when the
No, when did
contract
you-
was approved?
When did you vote on the
It was in the fall of 18.
Yeah.
No, it was fall of 19,
fall of 19?
I believe.
It was one of the last votes.
It was one of the last votes.
But that was the $40 million level.
The bond package itself, is that what we're talking about?
That's what we were told, 40 million.
We didn't engage Wilhelm until after the bond was approved, and that was a whole selection process. So, and we can get you that date.
Okay,
It's on the
maybe I've just
website.
got, maybe we've got the time frames off a little bit, because from what you're saying, it sounds like we knew, and then we went ahead and approved the funding for it
Right.
for a lesser amount, knowing going into it that we were gonna be off.
No,
But
absolutely not.
that's not, apparently not the case.
Yeah,
Okay.
no.
My vote was in the negative.
Yeah, so we had the funding amount approved, which is what we went out to bid for, and then what we were targeting when we were adjusting the scope to get to the project where we are today.
Okay.
Yeah, and I'm pretty sure that was it.
I think you guys have done a pretty good job. It's like building a house, and it's not either, but you start out in a project and you don't know what it's gonna cost, but sooner or later, it comes around to what it does cost. And, sooner or later, maybe later, we'll have to pay for most of this stuff. But the real payoff in this is the oversight and operation of it. And the construction cost, that'll be a memory of the past. It's just that we didn't agree that it ought to cost that much at one time, but anyhow, the majority did agree that it ought to cost that much, so that's kind of what we've got to go with.
Yeah.
But the bids have exceeded that, and that's where we find ourselves now.
Yeah.
Well, I think it's important to note, if I may, it's important to note that the estimation exercises that Jeremy referred to by two different entities is what really framed and what was, why the bond amount was predicated on that work product. So the $35 million, when we brought that before the previous council, it was predicated on all that estimation work that had been performed
Sure.
at that point. So, yes, there's a lag time, but we didn't go get the numbers and then say, okay, let's fund it. Not dissimilar from the parking garage. How much money do we have based on the increment? That's how we size, literally, and deal-wise, deal structure, the project.
Yeah, this is where we might disagree to some extent here, but, in 2016, it's almost like we have this in reverse. I think with Old Town, we have a private, company, so they have incentive to keep costs to X. Over on this side, if I'm, just kind of to jump on these dates, and again, these may not be accurate, but we started this process in 2016 and 2019. If I'm going to be critical at all, as I have been, I'm going to say, why in the world, if October 2019, we had those amounts, why wouldn't we wait if we were that close within the bond issuance? Because bond issuances can be changed in terms of amounts. We could say, hey, we're going to get 20 million, and literally go back and go 22. Why wouldn't we have done that?
Well, bear in mind, that $30+ million figure had been talked about over and over again.
Yeah, but it doesn't make it.
But from our side, and it's easy to look in retrospect from our side, that was a number that had been publicly stated, and that was the number we were going to stay committed to. So then the bids come back exceeding that. What argument you want to fight?
Yeah, no, I actually agree with you. So hindsight's always easier to say, hey, gosh, man, we should have done it this way. My point is that if we go into these things looking forward, this process, in my opinion, is flawed, because it's, hey, here in October 2019, we had, and I'm just speaking for me, I'm not speaking for these guys.
Yeah.
For October 2019, here we know this number, and yet we didn't ask for the amount needed to do the project.
So we ran that iteration out and said, okay, when we come back and said, now we need another $18 million. That would have flown like a lead.
Well, that's the point, right there.
But
Right?
so we either go, so what I'm hearing you guys say is you either go full throttle based on the conditions or you do nothing at all. Is that, to me, those are the alternatives?
I'm saying tell the public it's going to cost 48 million. If it's going to cost 48 million, tell the public it's going to cost 48 million. I don't know if you can believe it or not, somebody's eating some breakfast. But or if we have, or if we're all in at this point, tell the public it's going to cost this much more, and just do it the right way.
I want to push back on tell the public, because it makes it sound like we're trying to hide something. We told the public, based upon the numbers that we had, the estimation exercise we went through, I think the number's $35 million. We stayed committed to that. So if we're gonna err and be criticized for, we're stuck to the number we said we were gonna say, or we've advertised and publicly noted, then we go back and say, oh, we need another 20 million. That doesn't work.
So to your point and your statement a minute ago, Todd, where you said, that would go over like a lead balloon.
Yeah.
I think the approach, and again, this is just my opinion, but I think the approach where, let me back up before I say that. You're never going to have 100% commitment from everybody. There's always going to be the people that are for and the people that are against. Always. I'm not telling you anything you don't know. I think the concept of getting things off the ground for a certain dollar figure, and then coming back and saying, hey, you know what, we're going to need, 8 million more. We're going to need 10 million more. That goes over like a lead balloon as well.
And we haven't made that request.
I understand, but we also know that that's,
Right, right.
I mean, it's almost like you got, like, it's being suggested, we're gonna come back and ask that. We lay all the cards on the table, we're not making that request. We're gonna get this to where we said we'd fund it, and I think despite all the acrimony between the administration and the legislative group, we're trying to come together and say, okay, like the parking garage, a great example, right? That was born at the council level. And so we put all the pieces and parts together and you guys decide.
so again, to your point, I think this exercise this discussion that we're having right now is an opportunity to come together so that, again, here's what we've got right now. Here's the situation we find ourselves in. No one's, I'm not pointing a finger and saying, here's this, here's this, here's this. But moving forward, let's figure out how we work together to make sure that neither of us, the council or the administration, is in a position similar to this again, from the taxpayer's perspective.
So if we had, so let me ask this, I know if we had the do-overs, and looking in retrospect, if we, January 1st, pick a date, when you guys took your seats, came in and said, hey, this is what we know. We asked for 35 million, but it's gonna take 48 million or 50 million. What do we do then?
We're in the same boat, whether it's January 1st, 2020, or whether it's,
That's what I'm saying. I mean, so
March 1st of 2021.
The bell had been rung, right, and we said $35 million, and there's no problem whatsoever, because, look, you're gonna be presented on the 16th, other capital projects, a fire station, a public,
Sure.
police station renovation. And so we enlist some bright people that say, okay, we believe it's gonna cost X amount of dollars per square foot. So, what I'm gonna take away from this conversation is, so we don't find ourselves, to your point, in this situation again, where everybody's all into the corner, lobbing things back and forth. I think you formed a committee. I'm gonna use the parking garage as a perfect example. I like the idea for the exercise, bringing all these pieces and parts, putting in front of you. You go back to the balance of the council, and then we bring it to the council. So we have this flow chart, this process. We get a capital project, police station, fire station, whatever they are, bring them together. I'll make it as simple as possible, so it's intuitive, and we have this dialogue back and forth. There's more productivity in dialogue than there's debate. So Grand Junction, you inherited that. We said, and told the public for many, many years, 35 million, because that was the information that we were getting. Not to lay blame on anybody else, now it is what it is. So using this as a lesson learned, moving forward over the next 3 years and beyond, that's fine. We can use this assembly of this group. Hey, bids came back at X. Right now, fire station contemplated, I said 6.2, now it's coming back and they're telling me 7.
Yeah.
Why are we going up $1 million?
And that's another, I'm sorry, Troy,
No, go
that's another great example, because I think it was fall of last year, there was some pressure to I don't want to say pressure, that might not be the right, there was some conversation about, let's go ahead and get a bond for $5 million on this. And I know I was adamant that until we have an idea of what it's actually going to cost us, the answer is no. And that's a perfect example.
Yeah, so I think then, Council Fry is, this is, I think, a fair statement. Not understanding fully what this council's tenor is on borrowing money. We're trying to keep it a zero-sum game, so we had 5 million fell off. So more dialogue, understanding that, we're trying to read the tea leaves, that you guys don't want to borrow, you don't want this, don't want that. Okay, what do we do? So now with the fire station, another perfect example. I didn't realize how quickly design standards was being changed in light of COVID in a firehouse. So that adds to complexity, adds to cost.
That's fair.
So we assemble all that, we're going through the progressive design build project, or process right now. Bring those pieces and parts and lay it before you, because it has changed.
So in summary of these conversations, it sounds like we're moving in the right direction to get exactly what we're talking about.
Yeah.
I mean,
Well,
working together before the fact.
I would ask that we have more focused conversations.
That's why we're doing this.
Outside, even outside of this venue, right, in this monthly installment, because we can gain a lot of ground. That's my request, that's my expectation. I have no problem.
I'm available.
If we do it best for you all, that's fine, but we can push information and data as much as as quickly as we can.
The other thing, and I think we're all looking for, how do we avoid this in the future? The CMC statute was not available for public projects. In a traditional CMC format,
That's what you referred to prior.
yeah, the construction company, or that thing,
What is that?
so the construction company is on board in the beginning with the design team. And they are coming through this all along, and we get to a cost. This GMP that we have comes at the end of that design process, and you go build it.
Yeah,
We didn't have that until well after Grand Junction was constructed. It wasn't available to us in the public world. There's a design build opportunity that was there beforehand, but it's really designed for a building. You can't, it's pretty tough to design build something as, think of it as 20 little construction projects inside this construction project, which is really what it is. So I will come to you, and I've talked to you about it, the Simon Moon Park, which would be our next project, hopefully not including any debt associated with it, but I gotta get going on the design in order to get the ball rolling. That will be a traditional CMC, well, I will propose that it's a traditional CMC type construction project. So the contractor and the designers are working together as we come through. They are doing this value engineering as we are designing the project. So that way, when we spit out a number at the end, we understand that, hey, this is what it's going to cost. And in that one, we could either get a bond and go pay for the whole thing, or we have park impact dollars that can build it over time, add components here and there with cash, which is the plan for that. So in the unlikely event that we ever do another Grand Junction Plaza type project, we have learned enough and we have the tools available now to be more successful.
And on the 16th, you will see all the various revenue sources made available to us as a human government, what their historical growth has been over the last 5 years, maybe longer, what they're projected to do in the future, park impact fees, road impact fees, and the restrictions associated with those particular revenue streams. You just can't go throw them around like you want, like here, there, and everywhere. Lit and, of course, property tax. So that'll be probably one of the first slides in the deck on the 16th, just here's the income. Here are the current and potential future obligations to those accounts.
That's fair.
good. Meeting's adjourned.
Thank you.
Thanks, Jerry.
Thank you, everybody.
Thanks, appreciate it.
Is now exiting.